welcome to all of you. Since this is the first time that we are meeting in the new year, although it's almost becoming old. So somebody told me I should stop saying Happy New Year, I should say Happy New Decade, because the decade is going to run for a long time. So Happy New Decade to all of you. As usual, I will start by giving you the decision of the Monetary Policy Committee. I know that's what you are more interested in. And then I'll give you a summary of global as well as domestic economic conditions that underpin this decision. The Monetary Policy Committee meeting of the Bank of Namibia took place yesterday, and the committee decided to cut the repo rate by 25 basis points. And this decision was taken mainly to support domestic economic conditions, but also at the same time supporting the one-one link between the Namibia dollar and the South African rand. And of course, we have taken that decision after reviewing the global economic conditions as well as domestic economic conditions. So let me give you a quick summary of those developments. When it comes to the global economy, the International Monetary Fund recently revised its global economic forecast. For 2019, the picture has changed somewhat. Growth is projected now to hover around about 2.9%. It was around about 3 before, so it has edged downwards for the whole global economy as a whole, and mainly on account of decline in growth, or estimated decline in growth for advanced economies as well as emerging and developing economies for 2019. So growth is now going to be less than what was projected before. If we look at the advanced countries are now projected to grow by 1.7 in 2019 compared to 2.2 in 2018. As you can see, it has come down. And it's projected to stay there for 2020. In other words, this year. That's the projection for this year for advanced countries. Slightly lower than the estimate for 2019. So for 2020 is estimated to be in the region of 1.6. And the main reason is because of the trade tensions between the US and China. This is not news to you. This is something that you have heard before, that you are aware about. We are aware that these things are improving between the discussion between China and the US. We hope that this will be resolved in a short space of time so that growth, especially growth in the manufacturing sector in the world, can pick up again. When it comes to emerging and developing economies, again, the message is the same. For 2019, we have seen a decline in growth from 4.5 in 2018 to 3.7. That is for emerging and developing economies. Going forward, there is an expectation that global growth as a whole is going to recover, registering 3.3% in 2020, and that is on account of emerging and developing economies. As I have said earlier already, that advanced countries are expected to still show a decline in growth in 2020, but emerging and developing countries are expected to grow better or improve their growth rates. But I should also hasten to say that there are worries on the horizons. Chief among others, of course, you are aware that the outbreak of the coronavirus, that may have impact or significant impact on global growth, and of course it will affect all of us. It's still early days. We don't know what will be the impact, so that outbreak still have to work its way through before we can fully understand its impact on growth. But what is certain now is that if it continues for a longer time, it will definitely have a significant impact on global growth. Other reasons, you are aware of the trade tensions that I have talked about between China and the US. We hope that that will be resolved positively, so that manufacturing can start again to improve. Geopolitical tension between Iran and the US is another factor that we are worried about. So that's the picture on the global front, which is not different from the domestic picture. For 2019, we expect the economy to contract. And that, of course, a deterioration compared to the small positive that was registered in 2018. Fortunately, the NSA has revised their numbers recently. While it was recorded before that 2019 was a decline, was a contraction in economic output, the recent figure suggests that, in fact, 2018 was a small positive. But for 2019, we don't believe that it's going to be a small positive. The numbers are still being put together, but we believe that the economy will contract in 2019, mainly on account of sectors such as mining, particularly diamond mining and uranium mining, but also sectors such as agriculture for obvious reasons. Last year was a serious drought year, and agriculture has recorded significant contractions. But also sectors such as retail trade, they continue to be in the negative territories. The good news is that there seem to be some green shoots in construction. So we are seeing some indicators that show that construction that has remained in the negative territory for quite a long time is starting to bottom out. That's what we're seeing in 2019, and we hope that picture will continue going forward in 2020. And also in the transport sector, we have also seen positive growth in that sector. Overall, for 2020 as a whole, not 2019, but 2020, we expect growth to improve. Still early days to know what will be the exact number, but our expectations are that growth will be better for 2020 than 2019, or compared to 2019. That's on growth. If we come to inflation, inflation again continues to trend downwards. The downward trajectory that we have seen before is continuing. For 2019 as a whole, inflation is averaging 3.7 compared to a 4.3 in 2018. So you can see the trend is downwards, and that's on account of slower inflation or smaller inflation in categories such as rent payments, which is good for all of you, those who are renting. So these rent payments or the prices or rent payments are actually declining, because if you actually look at the figure for January, overall inflation for January is it's much lower, 2.1, which is one of the lowest in the recent history, compared to 2.6. So you can see this downward trend is continuing. In fact, the good news is that for January, we have actually seen rent payments actually declining in absolute terms. Not that inflation is slowing. In this case, for January, we have actually seen in absolute terms, if you were paying 3,000 before, I'm just giving an example, you will be paying less than 3,000. So in absolute terms, prices for rent or rent payments have actually declined in the month of January. So inflation is behaving well, and going forward, we expect inflation to remain below 5% for 2020. On domestic credit, not much has changed. We have seen a small uptick in overall growth in domestic credit, mainly on account of business sectors. So domestic credit is for 2019 is averaging 6.8% versus 6.3% in 2018. So as you can see, there has been a small uptick. And again, as I said, it's because businesses are borrowing, especially in the real sector. in the real estate sector, and also in some financial services, they have increased their uptake of credit. But it's not very significant. As you can see, the growth is quite marginal. The household sectors, or the UNI, the uptake in credit is not increasing. So we're still borrowing a little bit, but the growth is not increasing, unlike what we are seeing on the business side. And hopefully business will continue to borrow, but the borrowing to expand, to invest, so that we can create more economic activities in the economy. So that's what is happening on the credit front. When it comes to domestic to international reserves remain healthy. If we compare to the figure for January compared to what we told you before, the last monetary policy conference, there has been a small decline in reserves. The reserves are now standing at 31 versus 32.5. That's what we told you when you were here the last time. So you can see that there has been a small decline. But overall, if we express that in terms of months of import cover, reserves still remain healthy at 4.4 months of import cover. So as you can see, that's still healthy, and that is still able to support Namibia to support the link between the rand and the Namibia dollar, and as well as to meet all our international obligations. So that's not a cause for concern. So overall, these are the developments that influence or inform the Monetary Policy Committee to take the decision to cut the repo rate by 25 basis points. Let me stop there, and thank you for your kind attention.
My name is Kevin once again. I'm a host on Eagle FM. I'll ask you a question that was asked to the Reserve Bank Governor in South Africa, Mr. Kanyago. If the coronavirus, because this is the major elephant in the room right now, the Chinese economy is being pummeled day by day, and experts are predicting that international companies that are in the aviation industry are likely to lose between 4 to 5 billion US dollars. This is a global catastrophe. If this virus, in the likelihood that it hits us here, it's officially in Africa, it's been reported in Egypt, in the event that it hits us here in Namibia, how exactly can it affect our economy?
Good morning, Honorable Governor. My name is Thierry. I'm a freelance journalist. I just wanted to touch base on an issue that has been coming for quite some few years concerning the unified SADC currency. I wanted to know whether there are any updates to this, or it's something that is already dead in the sea. Then also, just to quickly touch base, I think
the
SADC unified currency. I think some few years back there was a lot of political.
SADC.
Yeah.
Okay.
I wanted to know whether this is an issue that is still being talked about, or it's fell off the radar. Then also just clarity on whether, I think sometime towards the end of last year, there was an upsurge of trade between Namibia and China. Could then this be interpreted as like a market diversification for the local economy, or it's really nothing to buy into?
All right. One of your reasoning here for cutting the repo rate is to say that it's to stimulate the local or the domestic economy. But I think according to I don't know whether it's the World Bank yesterday, one of the directors said that the monetary policy is weakening, meaning their effect is weakening. So if you just can quantify, because we keep saying we want to stimulate local economy, and there are these indicators saying that the monetary policy magnitude of stimulating economies are weakening due to other factors. So as the physical factor, we have no space in it. So maybe you can just quantify how far this will go.
Kevin, the impact of coronavirus, it's still early days to estimate what will be the impact of coronavirus. I see all kinds of estimates that are being developed by different commentators and experts, but all of us know that as you said, that this is a catastrophe that is still unfolding. We don't know exactly where it's going to peak and when it's going to peak, but I think what is clear is that it's already starting to disrupt economic activities. We know and we are aware that there are some factories that are closed in China. You probably have heard of companies like Apple that have already signaled that it may affect their sales in China. So I think everybody is trying to understand where is this outbreak going to stop. When it comes to Namibia, of course, we don't want it to come here. We don't want it to come to Africa. We don't want it to come to Namibia, because apart from the fact that it's already affecting Namibia in the sense that if the Chinese economy slows down, if the world economy slows down, you must think about your diamonds. Who are your biggest diamond customers? Americans and the Chinese. And if the Chinese economy is slowing down, it also means that your diamonds will not be sold to the extent they were sold before. So we could already see that impact in terms of diamond sales, and then therefore the inflow of foreign currency. And if it, of course, if it spreads to other economies like the US, and if it also impacting negatively on other those economies like the US, again, our diamonds production and our diamond sales will be affected. Tourism will be another channel. People will be afraid to travel because they don't want to be infected by this virus. So it is going to disrupt economic activities to such an extent that we are not able to imagine at the moment. So I believe all of us, we just need to keep our fingers crossed that it doesn't come here, and do whatever needs to be done to prevent it from coming here. But even if it doesn't come here, as I said before, there are already those channels where people will be hesitant to travel, and that will affect our tourism sector, and the fact that our diamond sales may also be negatively affected. So I will be very honest with you, I don't know what will be the impact, but it's something that I wouldn't want to imagine us getting the disease here, because it's definitely going to significantly disrupt economic activities here. I hope I have touched on that, Kevin. The gentleman who asked about the SADC currency, well, the SADC desire, I think the SADC desire is still to have integration in SADC, because it makes sense for these economies to integrate, for the SADC economies to integrate, so that we can improve economic prospects in SADC. Because if you are a bigger market, you are able to attract investments, because you are now, these investments or these investors will have a bigger purchasing power that is going to buy their goods and services. So it makes sense, it makes economic sense to integrate the region. It makes economic sense to integrate the continent. As you know, that the continent is also busy with a continental free trade area. So within that process of integration, of course, there are different phases. Phases of integrating trade. You have heard about the SADC free trade area that has been in existence since 2008. 2008, the SADC countries entered into a free trade areas, meaning that goods and goods can now move freely between the SADC countries without any restrictions of tariffs and other forms of restrictions. The next step is to go into other forms of integration. When SADC is aspiring to have a customs union, when that is going to happen, I think that's the initial idea was that was going to happen in 2010. Of course, a number of things have to happen before that happens, and therefore I think this is still work in progress. And from the customs union, you can think about an economic union, and perhaps now once you have an economic union, you can even think about unifying the monetary policy, because really a common central bank is to say, we are now going to take monetary policy decision in Botswana, if the central bank is going to be in Botswana, looking at the whole region. So that is still work in progress. As to when that is going to happen, I think the region is still determining that, is still assessing the appropriate appropriate time to do that. But what is important is that before you do that, you need to make sure that you have prepared yourself to have one currency and one, so to speak, one central bank, one common central bank. So it means your economies will have to be more or less at the same level. When it comes to things like inflation, has to be at the same level. That hence SADC has set itself some targets for countries to meet these targets. In terms of inflation, in terms of debt levels, we all have to observe those targets. So your debt should not be more than 60% of GDP, for instance. That's one target that has been set by SADC. Your international reserve levels have to be at a certain level, 6 months of import cover. So all these indicators or targets are put together so that the economies can integrate. Now, once we have integrated them, it will make sense to subject them to one common policy. Yeah? An example of that will be one interest rate, because they're now more or less harmonized, and therefore you can now subject them to one interest rate, for instance. So it's work in progress. There is no date yet determined. The earlier date has been revised because the earlier date was 2018, but we felt that it was too early. It was too early to have one common central bank because the economies have not been integrated well enough to be able to be subjected to common policies, for instance, interest rates, tax policies, and the like. So it's still early days. So, but that's a path that SADC is going to follow. I hope I have answered your question on SADC. You asked one on the diversification, which is a good story. Yes, it makes sense that we are diversifying our trade. One example, for instance, is that our beef used to go to only certain markets, so it's now going to China, which is, of course, a big market. I mean, with 1.2, 1.3 billion people, that's definitely a big market, and therefore it's a step in the right direction that we not only, selling meat to one specific market, but because it may also create problems. If you have problems in that market, it means that you cannot sell your products there, you cannot sell your meat there, and therefore the more diversified you are, the better it is for the country. So I think I agree with you. The diversification is good, and therefore we should celebrate when we see trade between Namibia and China improving, specifically if goods are coming from here to China, not only the other way around. That's what we would like to see. We would like to see more of that. The monetary policy, Rastus. Well, yes, you're right that you can't just rely on one instrument. That you only rely on one instrument to stimulate growth. I think in the previous conference, you asked more or less a similar question, and I explained that interest rate, in our view, is not the problem at the moment, because interest rate is still historically low. And therefore, what we are doing is basically to still create that conducive environment for growth to take place. But that doesn't mean that you stop there as a country. So once interest rate is conducive, you shouldn't undertake other reforms that need to be undertaken for you to encourage more investments. So I believe what you're saying is that yes, monetary policy has done what it's supposed to have done in Namibia and in the world. As I said in our last press conference, that interest rate is low globally, not only in Namibia, it's globally low. And central banks reduce monetary interest rate because there was a global crisis in the world, and therefore central banks had to do what they had to do to reduce interest rates so that they can create that supportive environment for growth to take place. So with that supportive environment from the monetary policy part, other reforms will have to take place for you to see growth. So it's not only monetary policy, and it cannot only be left to monetary policy. We need to undertake other reforms to be able to stimulate economic activities and therefore to see better growth going forward. So I don't think it will be helpful for me to say what will be the impact of monetary policy. As I said, it's not something that you're doing to stimulate growth. It's actually already low. It's not a problem. You are doing it to support that environment, that conducive environment that has to be there to support economic activities. So if you like, it's a necessary condition, but it's not sufficient to give you growth.
Yeah, good day. Thank you. My name is Brigitte, freelance journalist. I've got one little comment and one question. A comment about rentals going down, maybe new rental contracts, but not existing rental contracts. The average citizen doesn't feel that rental contracts are going down if he or she already has, a rental contract and is renting a property, and it's very doubtful that owners might lower the rent. They might promise to keep it at the same level when the contract ends and a new one must be entered to. So this idea, be happy the rent is going down, hasn't trickled down to the average citizen. And now to my question. Since the Bank of Namibia announced via a press release that the bank is going to issue a new bank note for the 30th anniversary of Namibia's independence, is there maybe a slight indication in what frame it's going to be, a gala dinner or something? I ask because many institutions think on the 19th of March they want to have big events for the 21st of March, and the media only got two hands and two legs to actually attend all these events or report on them. So that is my question, is that if there's a little indication maybe of a date or which framework it's going to happen. Thank you.
Okay.
Joseph Ailonga, Eagle FM. My question is really on the borrowing as well. I think you've indicated that there was a slowdown. That there seems to be a slowdown in terms of borrowing, especially domestically. And I wanted to find out, would restrictions and perhaps high restrictions, because we know that there are quite a number of restrictions that pop up all the time, and then it's indicated the bank tells or somebody tells you the bank has put out these restrictions. Would those restrictions perhaps be the reasons why we are not seeing more borrowings happening within the economy, and what does it have? What impact does it have on stimulating the economy? I did pick up one point where the issue around deposits on bonds was revised, if I'm not mistaken. So I just wanted to find out, would high restrictions be a cause of less borrowing within the markets?
I'm Jo Marie Dudley from Namibia Media Holdings. I also have a question around the borrowing. There is some analysts that feel that a 25 basis point cut won't help at all to stimulate the economy, especially from a consumer point of view, because of the high depth of consumers, and they also feel that commercial banks are reluctant to lend money because of the non-performing loans, etc. Do you have any comment on that? And do you have an indication of what the situation currently is in the banking sector as far as NPLs and defaults are concerned?
Okay, mine is also around the non-performing loan, even though we are now having different analysis on how the non-performing loan are doing. Currently, they are exceeding the benchmark at 4.7. And my question is surrounding even though we are saying that people are not borrowing, they are exceeding the benchmark. They are currently 4.7. So my question is, what is the exposure of the commercial banks? We are saying that people are not borrowing, but at the same time, the non-performing loan are still going up. I don't know what is pushing them up. what is the exposure of the commercial bank? Maybe if you can just, the last time you just told us that, yeah, they are taking necessary condition or precaution. Maybe just be specific. How can we shield the commercial bank, the whole financial sector in terms of that? And again, just to indicate that you also relaxed the LTV, the loan to the LTV that will facilitate people to borrow, because it's now relaxed, which can now foster more people again to borrow or for them to have access to funding. And that can also have an impact on the non-performing loan. And if you can give us just an update now, the 3 months update, I think by now it should start to show some teeth. And also we do have a theory, because according to the non-visa second quarter.
Just a minute. So the update you want is on the LTV or?
Yeah, on its impact on the non-performing loan so far. And the last one is now, given now those two conditions, the LTV, the relaxed conditions, but now we are also seeing that non-visa, they're indicating that there is quite a large number of people registering micro lenders. And if you look at the monthly uptake of their loans, the two types of loan they are giving, they are almost at 1 billion just in 3 months. And now we have a theory of some analysis saying that people, the one that are in debt or that are holding mortgage and they can't service them, it's like they are going to the micro lenders to borrow from the short time to come and pay their long-term debts. So what is your comment on that? Thank you.
I agree with Brigadier that rental contracts, if you already have a rental contract, you will have to continue paying what you have agreed with your landlord. But what we have also seen, of course, from the statistics from the NSA, we don't collect the statistics, but the NSA who collects statistics is saying that, in fact, for the month of February, they have, on average, they have actually seen rent payments declining in absolute terms. My own experience is that if you have a flat or a house that you want to rent out for the last 2 years or so, if you are lucky, if that contract comes to an end, and you are lucky to get the tenant at the same contract rate, you will be extremely lucky. Most of the tenants are very aggressive in negotiating their rental downs. Flats that used to go for 11,000, they are now hovering on about 8,000. So I think there's definitely downward pressure on rentals. It may not affect everybody, but I think we're starting to see that pressure. I'm not sure whether you are all seeing that, or you have the same experience as Brigitte. But I think you must negotiate with your landlord. Maybe you must come to me. I need to teach you some. Yeah, but I think this is a good opportunity to negotiate down your rentals, because I think there's a bit of an excess supply there in the market, and therefore landlords are willing to listen to you better. With regard to the commemorative note, yes, indeed, we have informed the public that we are going to issue a commemorative note for the 30th anniversary. At the moment, I will not be able to say much on that, because there will be an official launch. The official launch is scheduled to take place on the 21st of March. We do not have details yet as to what will be the form of that launch, where it's going to take place. There are still discussions to that effect. So we will be able to give an update in the next few weeks as to whether indeed it's going to be on the 21st, because that's our plan, and if it's indeed on the 21st, where is it going to take place and how is it going to take place. So we'll give you that update before the 21st, and hopefully Emma here will give that update time in advance so that you can also plan. We fully understand the fact that you cannot split yourself. And I know we are all anxious to know what is on the commemorative note, and all this information will be given. So let's wait until that time. You will have plenty of time to ask questions. The longer the restriction on the fact that maybe people are not borrowing is because there are restrictions. I hope you were not talking to one commercial bank or one person who was telling you that it's Bank of Namibia, because now and then now and then I see people approaching the bank saying that who said we cannot get money because of you, and many times it's not true. They just want to blame us. We are always used as a scapegoat by many people, so we are used to that. But I think the fact that we're actually not saying that people should borrow. We're not complaining that the household is not borrowing, because the household had a party few years ago. Yeah, we all had a party. We were borrowing, and we have borrowed up to the limit. And I think that's the point that you are making there. We have borrowed up to the limit. We actually not encouraging people to continue borrowing, especially for consumption. Borrowing for consumption means basically spending your future income now, because that loan will have to be paid back. If you're borrowing for something that is going to give you a return in the future, you are creating income for the future. But if you're borrowing because you want to go on holiday, or you want to have steak on your table every evening, that you are actually consuming your future income now. And in the future, you may not have that income. You're actually creating problems for yourself in the future. So we're not worried about the fact that households have actually reduced their borrowing, the uptake of debt. It's good. The household needs to shed off a bit of debt, so that they can create a bit of space for themselves. Otherwise, they will be in trouble. The fact that in the last maybe 10 years before 2016, household borrowed significantly, to the extent that the rate at which we were buying cars, the rate at which we are taking up overdrafts was growing in the region of 15-16%. It was not healthy. So what we are seeing now is actually a normalization of that situation. So we're not worried about that. So I don't think it's because of a restriction. It's just because we have actually reached our limit, which is actually a good development. So yeah, if somebody is complaining, it's because of us. I just tell them, maybe you have overextended yourself, and therefore stop borrowing. Don't use your credit card too much. I hope that will be good advice.
But on the commercial side, and as well as on the housing side, I think that's where on the bond side,
yes,
I think that is where my question lies. Okay. Not necessarily on household borrowings.
Okay. On the bond side, I was coming to the bond side, and I think somebody else again, Rastus, they asked about the bond side. We continue to encourage people to invest in housing. It's good to have shelter, but it's also a good asset to have. So fortunately, we still see mortgage, at an uptake of mortgage loans, still healthy. You are aware that we have reduced the LTV, which mainly means that the deposit on which you need to put down for a second property. It's not even for your primary property. It's for your second property. If you want to borrow to build a second house or a third house, obviously you cannot borrow without using your own money, because you are also going to put other people's money in danger if you don't have your own money. So the deposit has been reduced. Previously, you had to put down 20% deposit on that second mortgage, and the subsequent mortgage is 30-50% deposit. And the idea was really to try and encourage people not overextend themselves. If they are borrowing to invest, they must also have the skin in the game. They must have the skin in the game. Otherwise, you can walk away from that mortgage, and then you will be putting other people's money in danger. Because remember, the money that is with commercial banks belongs to you and I. Sometimes we are too hard on the commercial banks, but they are really trying to protect our own money. If they do not manage that money prudently, you and I will lose our hard-earned savings. So these restrictions are meant to actually support the safety of our money, and therefore the safety of the financial system. So what we have now done is, we have talked about that before, we have made the restrictions a bit easier for mortgages, so that people can invest in their second properties. Those who have got capacity and ability to do that can build second properties, and that hopefully will also help to kickstart or support the construction sector, as we have said, as I have said before. We have seen the construction sector that has been registering negative growth rates in the last 3 years or so, now becoming positive. We hope that momentum will continue. And we believe that the restriction of LTV has also helped to kickstart some activities in the construction sector. Not entirely because of that, but I believe it's also helped lending a helping hand to see more activity in the construction sector. So yes, on that side, we will definitely want people to invest in mortgages. We want business to take up credit and invest, not consume, invest. That way we can create economy. I hope we have talked about the same issue and I have answered your question. Joe, are you a prophet now? I saw an article that you expect the repo rate to be reduced or something like that. So since when did you become a prophet?
The analysts.
Oh, it's the analysts. Oh, okay. So maybe they were just that was wishful thinking. But I think the fortunate thing is that we were on the same wavelength. So the repo rate indeed has been reduced. Whether 25% or 25 basis points it's enough or not enough, we'll probably have different views. Our views, as I have said before, our views are that interest rate it's really historically low, and therefore it's not the only instrument that we need to support the economy. I can bet with you we can reduce interest rate by 200 basis points. You will probably not see much growth in the economy. First of all, as we said, households are already overextended. And secondly, we actually don't want households to borrow and consume because it's not a good thing to do. You can't borrow and consume. When you are borrowing, you must borrow for something productive. You must use your current income to consume because the consumption is now, it's not in the future. Don't use your future income and consume it now. That's because that's what literally, that's what it means. So yes, just to come back to your question, Joe Marie, we believe interest rate is not a problem. 25 basis point is still conducive and appropriate to continue to create that environment for growth to take place. But again, that's not the only thing that we need to do in Namibia. Other reforms are important to try and create a conducive environment for private sector investment to take place, foreign direct investment to come to Namibia, become a more competitive economy so that we can stimulate private sector investment. So those are the things that we need to continue doing so that we can kickstart or we can see a better recovery in the economy. Then just hoping that interest rate will be cut down to zero, that will not help us. It may just create problems for us. Banks are worried about NPL, yes. Banks will be worried about NPLs. They say that during good times, risk actually builds up. And we are coming from very good times. So households were borrowing, banks were happy to give money, but now the situation has changed. And therefore it's expected that banks should actually be more extra careful to give money to people. They should only give money to somebody that they think can pay back money. So I'm not surprised that banks are very careful because they are actually conserving their cash and only giving cash to people that they believe are able to pay back because they have already experienced a good number of people who are experiencing problems because of the economic difficulties. NPLs, they have not changed that much from where they were before since the last time. I think they are still hovering around about 4.8% of the total loan book of the commercial banks. Again, yes, elevated from the low figures that we are used to as Namibians. Yeah, we are used to about 3%. That's the norm. a number of, when it goes to 4.8, yes, we become worried, but not too overly concerned. Not too overly concerned. As I said, Erasmus likes asking this question, and he repeated again today. I said before that we have seen in some other countries NPLs are at higher levels than this. Namibia is actually still one of the lower. But what is also important to say is that banks at the moment are well capitalized. They have enough capital to absorb these losses. And therefore, as far as the stability of the financial sector, of the banking sector is concerned, we're not overly worried. We have, as I said before, at the last monthly policy conference, we have started a conversation with particular banks where the NPL ratios are high to proactively manage that, to make sure that they recover their loans from those that have received these loans, to make sure that they continue to build up high capital levels so that they can absorb some of these losses. So banks are still very profitable, and therefore they are able to absorb these losses. So we're not too over concerned, but of course the conversation with commercial banks is continuing. But it's again expected. During difficult times, some people lose jobs, they lose their incomes, they will not be able to pay back the loans, and therefore banks would have to be prepared for that. That's why they keep capital to absorb these losses. And we believe in Namibia banks have got enough capital and they are able to absorb these losses. I hope the rest of us have also answered the question on the NPL. Is there any other question that I have left out?
Yes, there is a micro lenders to service their mortgage.
Yeah, okay. Well, all I can say there, Erastus, is that when you are when you have overextended yourself, you cannot borrow yourself out of the problem. So if you believe you are going to borrow money to pay back this loan, you are just actually just making the situation worse. So I don't think that's a sustainable strategy to go and borrow elsewhere. So you have to restructure your spending. So maybe if you have 2 cars or even 1 car and you cannot afford both a car and a house, sell one. Don't go to the micro lender. That is my advice. But this will be my private advice. Yeah, not me as the people who here speaking on behalf of the Bank of Namibia.
But
my private advice to you is to sell your car if you have a car and you cannot afford your car.
But now the point is the means are being provided. It's like we are stimulating it to happen. If you are registering around 50 micro lenders in 3 months, what are we saying? It's like we're encouraging people to go borrow. Okay. Average in a month is 15 micro lenders that are being registered. What are we saying? And here we are telling people not to go borrow.
Okay, now I will not be able to comment on that. I think you need to have that discussion with Namfisa because I don't have the information that you have, and unfortunately it's not within our mandate to talk about micro lendings. Yeah, so please have that conversation with Namfisa.
On the Namibian dollar versus the US dollar, we're still up there. Do we see any reduction of that happening anytime soon? Or are we still going to remain in the 15s and the 14s? I think that's where we are this morning. We're sitting at 15 Namibian dollars versus 1 US dollar. Is that where we're going to remain? And what is the focus in terms of the bank on the Namibian dollar versus the US dollar, the currency?
Sure. Sailonga, you must not attend this press conference anymore because you're asking difficult questions. So I believe if I had an answer to that, I would have been a rich person by now. Yeah, I think the truth is that it's difficult to focus exchange rates because the exchange rates are moved by a number of things. Coronavirus breaks out, the exchange rate moves. oil prices goes down or up, the exchange rate moves. The president of Turkey fires his central bank governor, the exchange rate moves. So it's difficult to focus these things, and therefore it's very difficult to have a view on the exchange rate. So yeah, I would not want to stick out my neck on that, because there are so many things that impact on the exchange rate, and therefore it would be very difficult to have fair view on the exchange rate. So I hope you will understand my inadequacies to be able to predict something that is difficult to predict for me. I will not be able to predict that.
But how strong is the Namibian dollar versus how volatile is it, if one has to ask? Is it protected versus these external factors, or is it, since we are pegged against the rand, and we know that the rand is a very, very volatile currency, is that the same with the Namibian dollar?
Yeah. So the Namibian dollar is basically the external value of the Namibia dollar is actually the external value of the rand. So when the rand moves, it means the Namibian dollar basis all other currencies will move, because that's our external value of the Namibian dollar. So when you say the rand is volatile, basis the US dollar, for instance, we actually say the Namibian dollar is volatile basis the US dollar. Yes, the rand is the currency that is one of the currencies that is actually highly traded in the world. It's probably last time I looked at the statistics, it's probably the 18th currency that is highly traded in the world. It's a currency that is popular. People trade that currency, and therefore you see a lot of changes. But long term, I think the rand has been quite stable. And sometimes you see jumping, it comes back to what is called normal levels. But day to day, you see volatility because of all these factors that I have talked about, and many, many more that I have not even touched on. But it's not a currency that has collapsed. And as far as, and you probably want to say that, is it still a currency worth taking to? That's what I'm hearing you say. Yeah.
That would have been my next question.
Our answer is in affirmative, yes. It's still a currency that is worth taking to, because first of all, we do not see that volatility damaging us. We still continue to achieve our inflation objectives. Inflation is one of the lowest in Namibia and in South Africa compared to other regions, and our products exports are still competitive. So those are two things that you actually want from the exchange rate. Yeah, we always think that a stronger currency is actually a good currency. Not always the case. In many instances, it's actually not the case, because if you have a stronger currency, it means it may hurt your exports, and you will not be able to sell things outside the country. So if you put it on the scale of those two objectives, inflation and export competitiveness, we believe that this arrangement is actually giving us what we ought to get from that arrangement. So I hope I answered your question there.
Sorry, Mr.
You still want to talk about micro lenders?
No.
Oh, okay. Kevin, you must talk to him.
Okay, that's going to be the next one.
Yeah.
there's a
Critical one that we didn't touch on, the reserves.
Okay.
As we are seeing the trend that is going down, and one of our biggest trader, China, is slowing down in terms of their consumption given the coronavirus. So where are we going to get our foreign reserve to make sure that we have enough? Where maybe you can just give us an indicator that now, from now on, this is the alternative. As it has only been SACU, but now it's not sufficient enough. Where else are we looking? Given that our export, the diamond, uranium, in your quarterly report, they were indicating that you guys will not get enough. Maybe if you can just give us an indication that where are we looking at now to get foreign reserve, apart from SACU?
Okay. As I have said before, that there has not been much movement in reserves. So we have seen a small downward movement, but it's not out of the norm. The reserves are jumpy. Sometimes they go down a little bit, sometimes they go up. So on average, it has more or less remained the same. And expressed in terms of import cover, still remains in the region of 4.4 months of import cover. So that has not changed that much. Where will the reserves come from? Again, it relates to You have talked about the sources of reserves, which practically means exports. When we sell diamonds, when you sell uranium, that's where we get our foreign currency. Do we need to diversify? Yes, I fully agree with you that we need to diversify our economy to such an extent that we are able to export more things and hopefully more complex things to the rest of the world, so that we can actually earn more money, because you can only earn more money when you produce complex things, not producing things that other people are producing, because competition becomes tough. We want to be in your own league. So I think that's the direction. How do we transform the economy in such a way that we are able to create a higher productive capacity that is producing things that we can export? Because when we're talking about transforming the economy, we should think about export, because the domestic economy is actually small to be able to support significant economic activities. So we need to diversify our economy in such a way that we can export things outside, and that will add to our sources of reserves. It will add to the earnings that we get from minerals. It will add to the earnings that we get from meat, and of course with drought, meat is already becoming a problem. So that becomes more agent for us to reform. So I have talked about reforms before, and I will not want to venture into that again. But it's safest to say that reforms are important so that we can create capacity to produce exportable goods that can earn us international reserves. So for now, we're not too worried about the level, but it's important that we diversify our foreign exchange earning sources. And there we agree with you.